Before we get to today's picks, I want to clarify something. I have noticed queries about why I've begun discussing stock fundamentals, news, and other non-technical details in these daily videos, despite this channel's focus on quantitative trading. Let me clarify, our algorithm for selecting daily oversold stocks established in 2019 remains unchanged. So why the new layer of commentary? The answer lies in a blend of curiosity and a deeper search for understanding. Over the years, I have always wondered about the stories behind the stocks picked by our algorithm. How do these selections, which we might only hold for 24 hours, fit into the broader market narrative? What can they tell us about market behaviors and trends? I have always seen each of our daily picks as a character. This exploration stems from a desire to delve deeper into the characters behind our daily picks. For years, I have been eager to understand the context around these daily picks, their dynamics at play, and the factors influencing these picks. It's about reverse engineering these picks through a conventional analysis lens. By exploring fundamentals and news, I aim to learn more about my daily picks and, in the process, video journal it. The goal is to satisfy my curiosity, offer a richer view of market dynamics, and who knows, potentially uncover insights and patterns that could inform new strategies when we do a retrospective at some point. And by sharing it with my followers, I aim to foster a community of learning and exploration. I hope this reassures you that our commitment to our quantitative foundation is unwavering. Today's pick number 1 is QDEL. QDEL Ortho Corporation develops and manufactures diagnostic testing technologies. QDEL is considered oversold due to several factors, despite a notable 11.57% rise in stock price today. This increase could reflect a market correction after a period of intense selling, triggered by lower than expected Q4 results and a subdued FY24 earnings outlook. The downgrades by analysts, legal inquiries, and investor concerns over the company's strategic direction have fostered a bearish sentiment. Even with today's uptick, the cumulative effect of these factors suggests that the recent positive movement does not fully mitigate the broader trends that have led to the perception of the stock being oversold. Today's pick number 2 is SIRI. Sirius XM Holdings Inc. provides satellite and online radio services. The perception of SiriusXM being oversold may stem from a confluence of factors, including recent insider selling, a negative trend in stock price with a year-to-date decrease of 13.53%, valuation metrics suggesting possible undervaluation, and a complex corporate restructuring following Liberty Media's transaction to simplify SiriusXM's ownership structure. Additionally, the company's high debt levels, with a debt-to-EBITDA ratio of 3.75, substantial short interest, representing 4.33% of outstanding shares, and financial efficiency concerns, such as a negative return on equity of -42%, may contribute to investor caution. These elements, combined with broader market conditions and sector performance, could collectively signal to the market that the stock is currently oversold. Today's pick number 3 is BSM. Blackstone Minerals owns and manages oil and natural gas properties. BSM may appear oversold for several reasons. Firstly, the company pays out a large portion of its earnings to shareholders as dividends. While a generous dividend can be attractive, there's worry that it might not be maintained if the company isn't making enough profit. Secondly, the stock price has fallen since the start of the year, suggesting a negative trend. Analysts are advising investors to not buy more or sell their current shares, with a hint that the price could go up. Additionally, there's been a rise in investors betting that the stock price will drop further. The company also reported earnings that fell short of what was expected, even though their revenue has grown compared to last year. Lastly, operational updates indicate that their partner, Aethon Energy, has paused some drilling activities due to low natural gas prices, which could affect future profits. All these factors together may lead to the impression that the stock is being sold more than it potentially should be. Today's pick number 4 is SSRM. SSR Mining explores and develops precious metal resources. SSRM is considered oversold due to a concatenation of detrimental events. The halt of gold production at its copper mine in Turkey on February 14, 2024, after a landslide, followed by the detention of 8 employees on February 17, 2024. The situation worsened when, on February 19, 2024, the company's environmental permit was revoked due to the landslide, leading to a postponement in the release of its full year 2024 financial results the next day. These incidents have sequentially battered the company's stock, leading to a steep decline in share price, analyst downgrades with low price targets, doubts about dividend continuity, and a bearish sentiment further deepened by its correlation with the volatile gold market and potential ongoing Federal Reserve policy tightening. Today's pick number 5 is SGML. Sigma Lithium Corporation specializes in lithium mining and production. SGML might be considered oversold due to a mix of positive developments and market reactions. Despite reporting strong profits and operating efficiently, as well as achieving full production capacity at their environmentally friendly plant, the stock has seen a substantial price drop, nearing its 52-week low. This could be seen as a mismatch when you consider their strategic expansions, such as planning to list on more stock exchanges and securing funding for new projects. However, mixed opinions on social media and analyst upgrades add to the stock's volatility. In simpler terms, despite the company doing well operationally, the stock price has fallen quite a bit, which could lead some to believe that the stock is now cheaper than it should be, signaling it might be a good buy.